sharing profit and losses in the ratio 1 by 2, 1 by 3 and 1 by 6. Balance sheet as on the date of dissolution of the firm was as follows. Liability side: capitals Asha 20,000 rupees, Manisha 15,000 rupees, Nisha 20,000 rupees. Profit and loss account 12,000. Provision for taxes rupees 10,000. Creditors rupees 20,000. Mortgages 8,000. And in the asset side, goodwill rupees 10,000. Land and building rupees 30,000. Plant and machinery rupees 15,000, stock 20,000, joint life policy rupees 10,000, debtors 17,200 and cash at bank rupees 2,800, and the liability side and asset side balance is 1,05,000. So and the adjustments are: on dissolution, land and building and plant and machinery realized 20% more than their book value. Rupees 15,700 is collected from debtors in full settlement. Manisha took over stock at rupees 17,000. Goodwill realized rupees 4,000. Joint life policy is surrendered for rupees 8,500. Creditors are paid off at a discount of 10%. The firm had unrecorded investment which is realized 4,000. There was a liability on repairing bills outstanding rupees 1,500. Actual liability on taxation amount rupees 4,000. Realization expense amount rupees 1,500. Prepare realization account, partners capital account and bank account. Bank account means cash account. So first I am going to prepare the realization account, then we prepare the partners capital account, and finally we prepare bank account or cash account. In the realization account, first we write all the assets in the debit side and all the liabilities in the credit side. We don't write cash at bank and fictitious assets in the debit side of the realization account. First I am going to write all the assets in the balance sheet to the debit side of the realization account. First item is goodwill rupees 10,000. Next item is land and building rupees 30,000. Plant and machinery rupees 15,000. Next items are stock rupees 20,000, joint life policy rupees 10,000 and debtors rupees 17,200. I wrote all the assets in the debit side. Now we have to write all the liabilities in the credit side. First item is provision for taxes rupees 10,000. Next item is creditors rupees 20,000. Next item is mortgage loan rupees 8,000. I wrote all the liabilities. In the asset side of the balance sheet, there is a cash at bank rupees 2,800. So we have to write that in the cash account as balance brought down in the debit side 2,800. So I am going to write that. And in the liability side, the capitals of Asha is rupees 20,000, Manisha is rupees 50,000 and Nisha is 20,000. So we have to write that in the credit side of the capital account as balance brought down. So I am going to write that in the capital account. Balance brought down: Asha rupees 20,000, Manisha rupees 15,000 and Nisha rupees 20,000. There is one more item left in the liability side, that is profit and loss account 12,000. We have to share this profit and loss account 12,000 to the partners in their profit sharing ratio 1 by 2, 1 by 3 and 1 by 6. So we have to write that in the credit side of the capital account as profit and loss account. So I am going to share the profit and loss account to the partners. Asha will get 6,000 rupees, Manisha will get 4,000 rupees and Nisha will get 2,000 rupees. So we write all the items in the balance sheet. Now we don't need to check the balance sheet again. So now I am going to realize the assets and pay off the liabilities. First I am going to realize the assets. So in the credit side of the realization account, cash, in the adjustment it is saying that land and building and plant and machinery realized 20% more than their book value. The land and building rupees 30,000 and plant and machinery rupees 15,000. We need to calculate the 20% more of these land and building and plant and machinery. So we will get land and building rupees 36,000 and plant and machinery rupees 18,000. So 36,000 plus 18,000. Next in the adjustment it is saying that rupees 15,700 is collected from debtors in full settlement. So the debtors also realized with rupees 15,700 plus 15,700. Next, joint life policy is surrendered for rupees 8,500. So joint life policy also realized for rupees 8,500. Next in the adjustment it is saying that the firm had unrecorded investment which realized rupees 4,000. So we need to write that. So plus 4,000. And there is one more item left in the realization account, that is goodwill. We have to realize goodwill. In the adjustment it is saying that goodwill realized at rupees 4,000. So plus 4,000. So I am going to calculate the total. The total amount is cash rupees 86,200. Now I am going to pay off all the liabilities. So first item is provision for taxes. In the debit side, cash. In the adjustment it is saying that creditors are paid off at a discount of 10%. So the actual value of creditors is rupees 20,000. We need to find out a discount of 10%. So the 10% of this 20,000 is 2,000. So we need to minus this 2,000 from the 20,000. That is 18,000 is the paid off value of creditors. So I am going to write that creditors rupees 18,000. So in the bracket 18,000. Next, provision for taxation rupees 10,000. So in the adjustment it is saying that actual liability on taxation amount to rupees 4,000. So the paid off value of provision for taxation is rupees 4,000. So plus 4,000. Next liability is mortgage loan rupees 8,000. There is nothing saying about the paying off of mortgage loan. If nothing saying about a realization or paying off a asset or liability, but we need to realize and pay off that liability in their actual value. So here the value of mortgage loan is 8,000. So we need to pay off the mortgage loan in 8,000. So plus 8,000. And in the adjustment it is saying that there was a liability on repairing bill outstanding rupees 1,500. So plus 1,500. And also realization expense amount rupees 1,500. We also want to pay off that. So we pay off all the liabilities. Total amount is rupees 33,000. In this problem there is one more item to realize, that is stock. We don't realize the stock yet. So in the question, in the adjustment it is saying that Manisha took over stock at rupees 17,000. So we need to write in the credit side of the realization account Manisha's capital rupees 17,000 because Manisha took over the stock. So now we realize all the assets and pay off all the liabilities. Now I am going to balance the realization account. Here the realization profit is rupees 6,000. We need to share realization profits to the partners in their profit sharing ratio 1/2, 1/3 and 1/6. So I am going to share the realization profit. So realization account is over. Now we have to prepare the partner's capital account. So first we need to transfer this realization profits to the partner's capital account. So realization account. Asha rupees 3000, Manisha rupees 2000 and Nisha rupees 1000. And in the realization, we write Manisha's capital in the realization account. So in the debit side of the capital account, we need to write realization in the Manisha's column 17,000 rupees. There is no more item in the capital account, so I am going to balance the capital account. So capital balance of Asha is rupees 29,000 and Manisha is rupees 4,000 and Nisha is rupees 23,000. So we need to write that. So partner's capital account is over. Now we have to prepare the cash account. In the realization account, we realized the assets and the realization amount is rupees 86,200. So we need to write that in the debit side of the cash account as realization rupees 86,200. And in the realization account, on the credit side, we pay off all the liabilities